So looking across the table, the heat map coming into data in 6 minutes time, um, we've got silver, which is showing that we have a two-star setup brewing. Actually, I mean, it's in play, but what I would want to do is wait for all of the time frames to be read. So let's look at the chart. So at the moment, the information that we've got is that we've got a downtrend because we broke the low of Friday, yesterday. We broke below the previous week's highs yesterday. So that's a downtrend. We've got a fake out high on that weekly level. So we rallied last week, broke the highs of the previous week. So we rallied. We came back inside yesterday of that range. That's bearish. So the thesis is that everyone going long is trapped. It's a bull trap. All of this here is volume that's trapped, trying to go long. They've been squeezed out. They'll be looking for the price to potentially come back in and get them out of break even, perhaps, but quite often the price will not come back, or it will come back to an extent before rolling over as positions are exited. Okay, so those buy positions are sold off, and that leads to a sell off. But in any case, at the moment, everything is looking rather bearish across the time frames. The only time frame that isn't, which is bullish, is the monthly chart. So let's look at the monthly chart, or the levels at least. So we're talking about that's last month, December. This is the range from November. All of this here within the purple box. So November's low, if we drag it across, the indicator shows us that we are currently just about above that level, November's low. It coincides with today's point of control and yesterday's point of control, and hangs just above yesterday's closing price. So if we mark all of that off as support, excuse me for my sniffles, I've got a cold. Can't be helped, I'm afraid. Okay, so there you go. So that is support. So we are bullish on the monthly chart above that support level, but everything else is stacking up bearish. And our indicator is telling us we're in a downtrend. The previous breakdown, which is essentially yesterday's breakdown of Friday's low, to sell at the high of the day. So we're at the high of the day, pretty much, London's highs. We came back inside of Asia's highs, and there's still some space to go to yesterday's low. It hasn't been taken out. We're still an inside day. But because of yesterday's sell-off, we are biased bearish today as well. Now, we've got a first red day, signal day. Data's coming out in 2 minutes, which is essentially a day that breaks down following two consecutive up days. So we've got two consecutive up days over here, and we've broken down. We've broken down Wednesday's low, in fact. That fake out low, which led to a fresh high, has been taken out already in yesterday's sell-off. So everything's looking rather bearish. What I want to do, rather than just selling blindly, I'd want to see this support structure taken out. And then we'll have all of the time frames aligned for a sell-off in line with yesterday's first red day. So impulse, correction, continuation to the downside. So that's what I'm holding out for, to see if that pans out. We've got the data coming out as we speak, or as just Just waiting for that to fall in now. So that's the thesis for silver, in line with the Trend Predator Pro setups flashing here for a sell-off. On the other hand, if this doesn't pan out and this support structure holds, or even if it breaks and then pumps back up, here you go. See, well, the data's come out. We're now pumping. Um, the data was a fair bit lower than anticipated, 3.5 versus 3.8. So we've got a rally there in silver, likely sell-off in the dollar, which is throwing a spanner in the works for us at the moment. So the dollar there is selling off, and silver is pumping. And that's fine. We don't trade the data, or I don't at least. I wait for the dust to settle. This could quite easily drag traders high only to squeeze them short and sell off. On the other hand, if this were to continue pumping, and if we break back above Friday's lows, then that is a bullish scenario for a continuation up towards the highs of the week. Because then we will be breaking out of the previous week's highs, which we're doing now, just about, trying to at least. So there's the week fake out high. So if we get above that level there, and then above the daily breakdown level, so up here, then we'll have a full continuity bullish to go long. But bearing in mind, you're going long into what was a first red day sell-off yesterday. So I'll just be a bit cautious buying into that sell-off, but you never know. And the value area high could be targeted and see how the price behaves at that level. Whether it will continue up or whether it's going to act as resistance and head sideways and close. So there's various scenarios, and there's no fixed outcome. You need to be adaptative to the price action from levels within the confluence of the higher time frames and momentum and trend. That's essentially my approach, and we'll keep monitoring this. My trading window personally is not until later on in the day, 10 a.m. New York. So whatever happens at this point, it's really here nor there for me. What I'm looking for simply is a trade setup according to my rules. I don't mind if it's bearish or bullish, up, down. It's one of the two, and I'm looking at a collective of instruments for the best engineered chart possible with regards to my rules and approach. So silver may not be the one. It was looking as though it could be, depended on the data, but the data came out and threw a spanner in the works for the trade setup, so nothing was done. Not that I would have done anything anyway on the data. It's not my style. I wait for the data to settle. The market, well, the data's come out and then the market's settled down and show its hand in terms of direction that it's most likely to go for the rest of the day, or at least for a point of time during my trading window. So at the moment, this is the London box. It's bullish. When it comes to 10 a.m., who knows what the range will be like. But 10 a.m. has still got quite some time to go. Popping higher again. You never know. What we might find is that when 10 a.m. comes about, or the new 8-hour box at 9 a.m., from 9 a.m. to 10 a.m. during the Wall Street Open might continue pumping, and we might come back inside. And if we come back inside below the daily breakout level and that weekly fake out high level, then again, that will be bearish for the continuation. So it's about sitting on your hands, being patient, and letting the market do its thing and show you its hand. Okay, I hope that was insightful. That was silver. and we'll leave it there for now.